Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, the 21st of March, 2007, and the market's closed. Had a little delay there. So the S&P 500 blasted right past that 50-day moving average. Looks like it was a very painful day for the shorts today after the Federal Reserve meeting. And looking at this, the S&P, the spider, was up $2.32 or 1.65%. Yesterday and the last couple days, we're getting a little bit bullish on the short-term trend because we'd seen this rising 5-day moving average. And I was thinking that perhaps if we got past this level at 141.5, that's where the initial resistance would be. But clearing that level would bring us to maybe 142.5, which is where the approximate location of that 50-day moving average is. And once again, it shows that you have to pay attention to what you see rather than what you think. In other words, it's easy to look at this market and say it's broken down and to have been bearish and keep looking for the market to fall apart. It's been easy to look at this lower volume and say it's due for a decline because it's been rallying on light volume. But today the buyers were back in full force again, and I think it's got a lot to do with short covering here. But the buyers were clearly in control today after that Federal Reserve meeting. It blasted right past that resistance level and continued to squeeze those shorts in a very hard way. So you have to pay attention to what the market is saying. And while I've been saying that we have to consider it guilty till proven innocent because of a declining 50-day moving average, I've also been saying that we have to be aware that the short-term trend is higher and it doesn't make sense to sell short while prices are rising. You never want to sell short on strength. Leave that to the specialists, leave that to the market makers, leave that to the hedge funds that control billions of dollars. What we want to do and where our advantage comes from as shorter-term players is to trade with the momentum and with the trend. And the short-term trend has been higher with all these moving averages, in the 5-day moving average in particular. Since that turned yesterday, that said that the buyers are back in control of the short-term trend. And I definitely wasn't looking for the market to rally this much. I thought that maybe that 50-day moving average would act as a magnet, and I didn't realize that we would get here. But you know what? No one knows what the market's going to do. All we can do is anticipate the different scenarios and try and, first of all, not fight the momentum by selling short into this and thinking, well, I'm going to sell it at 141.50 because that's where resistance is. Resistance is only known after price moves away from it. You can't look at a market and at this point right here say there's resistance at 141.5. There might have been resistance at one point at 141.5, but resistance, the more times it's tested, the more likely it is to overtake it. We've seen what I've been talking about the last couple of days is that we've had the buyers in control right here at this point. This is where officially, in my mind, the buyers took control of the short-term trend. Go back and take a look at the videos from yesterday and the day before, but that's where we had a higher high to match this higher low. The definition of an uptrend is higher highs and higher lows. The moving averages don't do anything other than confirm that. They don't lead it. They're not the reason to get long. They're not the reason to get short. They are, however, just a confirmation, and we want to see them all kind of lined up in this fashion to see that where the buyers have taken control. Back to what I outlined a couple weeks ago is that we had let's just take a look at a couple more days here. Let's make it 15, I guess. But what we had in here was we had a little downtrend. We had indecision where these moving averages crisscrossed. We had a higher low, then a higher high, and the buyers took control here. Then we had indecision as the moving averages crisscrossed, and then we had a bear market on this time frame right in here. We had indecision. The market took out this level of resistance here. That's where the buyers took control once again. So our job is to listen to the message of the markets, not to listen to the commentators, not to listen to whatever it is, but listen to the market and try and listen as objectively as possible. And if we're wrong, get out of the way quickly before you get stampeded like the shorts did today. The Nasdaq 100 was up 84 cents or 1.93%. Also blasting right past that 200-day moving average that I was suspecting might be an area where we encounter some resistance. Blasted right through it though, like I said. So we've got in the Qs, we've got the same thing here. This market on the 30-minute time frame, once it blasted past this $43.40 level, we were looking at that saying, well, we've got a higher high. Yesterday, that resistance acted as support. We had all these moving averages and that 5-day moving average advancing. You don't expect this type of move to happen, but news and surprises tends to follow the direction of the trend. And here, you know, there was anticipation of something good happening. It did happen, and the shorts got crushed today. So, and that's where that big volume came from. Is you know, basically short covering in there. Market finished right near the high of the day. Where it goes from here, anybody's guess. I mean, I would expect just after the violence of this rally, then maybe we can continue up and close this gap, and then maybe it's just going to start chopping sideways again. It could be that maybe we just got a big bear trap in here, and the market's going to turn, you know, just continue to shoot higher. Who knows? I'm not going to play that game. All I know is that the market is a little extended here. These types of gains are unusual, so don't go chasing stocks. I don't think that's the best course of action. But look at the market one stock at a time and try and find where the best odds are. The MidCaps, MDY, were up 1.4%, $2.18. It took out that resistance right here as well at the what it was about 152.5 area. Once it broke past there today, off to the races. And then what I've been pointing to in here is this is the healthiest market because the 50-day moving average is still advancing. Looking at the 30-minute time frame, we can see that this is the level that it needed to clear. It got past that with conviction today at 152.5. We can see that a little bit better in here. But that 152.5 level was clearly taken out. This is where the buyers took control. Look at that video from a couple days ago. We had these higher lows. This is where we had our higher high. And this is what happens in an uptrend. So we need to focus on the trade the short-term trend, but always be mindful of what's happening on the bigger picture. Now, the SMH today also had a pretty good rally, but not quite. It didn't hold on to all those gains. You can see, and that's probably a bad print. I would say this is probably the high. I didn't see that till now. But this market had some buyers in it as well, but still nothing changed. Just back to the middle of the range. Let's take a look at the stocks we've been mentioning here the last couple of days. First of all, Brocade, symbol BRCD. We got involved yesterday at what price? At $9.95, and today I'd suggested that you raise your stop to $8.98. So you got stopped out of that one with a 6 cents loss. Got stopped at ISE, unfortunately, too. My stop was just a little bit too tight. And look at how it held that 5-day moving average. Man, that pisses me off to not have seen that. I should have put it just a couple pennies lower, maybe even below yesterday's low. But I didn't want a big loss. We got stopped out at 46.89 after getting involved at 47.25 in here yesterday. And this one took off very nicely after that Fed meeting, but not for us. eSolar, ESLR, Evergreen Solar. We got involved yesterday. Kind of concerned that it was breaking down in here, but I'd suggested raising your stop to $9.88. That stop didn't get hit today, so it's closed up at this $10.30 level, and you know this is the level it needs to get past. So I think this one could continue higher, and I was pointing on a weekly time frame, this inverted head and shoulders, and we can even see on the daily. But this indicates a target of $12 a share. First, we got to get past this $10.30 and past that $11 level. But the stock's acting good, and I think you can raise your stop right now to about $10.08. Raise that to $10.08. FalconStor Software. We got involved in this one yesterday at $10.55, right about here. So involved at $10.55. Actually, I'm sorry, that was today. So we were involved at $10.55 today in FalconStor. The stop I had suggested was $10.32. I think you can raise that one now to, let's say, $10.73 in FALC. SMSI, this one kind of gapped up a little bit. I said buy it above 25 cents. We got stopped out basically for a loss of about 25 cents. And we also had VRGY on the long side today. Suggested buying that stock above $24 a share. So involved there, and now I think you can raise your stop. We had it at 23.69 actually. So let's raise that stop up to 24.43 in VRGY. And then, of course, we had one short sale, which did unfortunately trigger right near the open, and we had a tight stop in there, though. We were going to sell it short below 1370, stop at 1388. So we got stopped out with a loss of 17 cents in FDRY.